everyone. It's Katie Talati, Director of Research at Arca, back with another episode of What's Driving Token Prices. So just to give you guys some background, if you haven't joined us, or if you didn't join us last week, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price shifts. Based on our research and market events over the past week, we're here to talk about some notable token price movements and what we think drove these moves. So just to let you guys know, I'm actually calling in today from Miami. I'm at a conference here, which is why there's a ton of background noise, so apologies in advance. Excited to get into the things this week as the market has been super interesting and obviously very volatile. Just before we start, as a reminder, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. All right, cool. So now that we have that out of the way, I was just going to start by kind of giving you guys some background information on there's not a ton of news, I guess, out this week on specific tokens. It's super interesting in markets like this because what we actually find is that when there is a lot of volatility, and especially if we have a couple down days in a row, a lot of projects tend to not actually release any new news because they don't want to release news into kind of a down market. So a lot of this week's news isn't directly from the project. It's kind of more surrounding what's happening broadly with the market. So we're going to start off with Solana this week, which is actually down 27% week over week. Solana is one of the top layer one smart contract protocols. This last week, it actually experienced frequent unstable network conditions during the market sell-off, which reduced transactions per second, aka like network speed and throughput, delayed transactions, and in some cases stopped transactions altogether. A lot of users ended up going to Twitter complaining about their inability to top up their margin in Solana-based trading accounts, which caused a number of cascading liquidations. Meanwhile, a number of Solana supporters, such as FTX CEO Sam Bankman-Fried, reminded everyone that these protocols are early and we need to be patient as they work out the kinks. I think what's kind of notable about this is Solana's had several what people would call degradation events over the last couple months, and I think a lot of people who've been very big supporters of Solana for its low to no transaction fees and fast speeds are kind of realizing that now this does come with certain trade-offs, such as in volatile times, you may not be able to actually rely on the network to do anything, no matter how much gas you would pay. Whereas on Ethereum, when you're able to actually put through a lot of gas, your transaction will eventually go through. So that was one kind of interesting observation from as it relates to the market sell-off last week. All right, next up we have Sushi, or Sushi, the token for SushiSwap. So Sushi was actually down 25% week over week. But SushiSwap, for those who don't know, is a decentralized exchange. Pretty broadly in the last week, they underperformed the DEX sector. Their volumes were up 30%, while competitors like Uniswap saw their volumes increase 74% week over week. Their weekly average users also fell 24% week over week to 27,000 unique users. What's kind of going on with Sushi is last week, they re-released limit orders and overhauled their farming UI and UX. And they're currently in talks with Optimism to launch on their L2 solution. Probably the most notable thing that happened with Sushi 2 in the last week was that all three of their governance votes passed. And these governance proposals, they're based on the restructuring proposal put forward by Arca and Frog Nation. And this essentially paves the path for SushiSwap to become part of Frog Nation and find valuable synergies with other projects in that ecosystem, which includes Time, MIM, Spell. So it's kind of essentially like a merger. The merger is going to be super beneficial, we think, to SushiSwap, which really struggled the last few months with infighting and lack of leadership. I've linked in the blog. There's got some more context on kind of Arca's involvement and what we were trying to do there in terms of driving change. So we're really hoping to see some great improvements from the project now that they're partnered with Frog Nation and have a whole new swath of supporters and products to work with. All right, next up we have MKR, or MakerDAO, which was down 10% in the last week. MakerDAO is a decentralized lending protocol based on Ethereum. They're actually one of the first DeFi projects. So last week, because the market was very unstable and fell roughly 8% on Friday, we actually saw a ton of liquidations, specifically on Maker. So Rune, the founder of Maker, actually flagged on Twitter at one point that the protocol would potentially market sell $600 million of Ethereum, which is not a drop in the bucket, unless the owner of the vault added collateral. This tweet actually, unfortunately, had the consequence of further panicking the market. Ethereum fell another 9% in 40 minutes before the vault owner kind of like woke up and ended up topping up their collateral. Unfortunately, 65 million of Ethereum was still market sold, but I mean, that's not bad considering it was up for 600 million. Notably, Maker outperformed actually this last week, only down 10%. The other two I mentioned were down quite a bit more. And we think this is likely due to the extra revenue that the protocol earned via those liquidation fees. All right, last but not least, we have the graph, GRT. So the graph was down 17% week over week. The graph, for those who don't know, is a decentralized data indexer, but actually a really better way of thinking of it is they're basically the Google for crypto or for digital assets. Essentially what they do is they kind of there's a lot of data between all these different blockchains, and they kind of go in there and they're like, okay, we know you can find that data here, and they index it the same way Google went through and they indexed like every link on the internet essentially. So for any kind of company, it makes a lot of sense to use the graph because they then have access to data without having to go and like clean it themselves or index it themselves. So, creating a huge infrastructure piece, I would say, for like the Web3 economy. So last week, they actually announced that they raised a $50 million round led by Tiger Global, along with Blockwell Digital, Finbushi Capital, FinTech Collective, and Reciprocal Ventures. So, great deal for the graph in terms of adding additional VC partners. I think what's interesting from this is that Tiger Global has actually been very active in the space recently. Particularly, their last several investments have been in Serum, LivePeer, MoonPay, FalconX, and many others. And I think it's a good sign to see more traditional finance investors adding names from the crypto space. So that's kind of most of what we have. Like I said at the beginning, if you noted, a lot of none of these tokens were actually up week over week. We did see a massive sell-off on Friday over the weekend, very much macro related. It's kind of conditions like these, even really positive news or additional revenue isn't really enough to kind of potentially correct some of the pain. But we're excited to kind of share insights like these, especially with even though it's being unstable, it brings us some interesting insights into how some of these products operate. All right. Well, thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.